Welcome back to Stocklabs for another market recap. This is for the week that ended December the 3rd. And yeah, market got smoked this week. So we continued a lot of the liquidation action that's been going on the past couple weeks in November. I mean, the that first week in November where everything went flying, I mean, that's a distant memory at this point. The market's been nothing like that the rest of the month. We've been selling off almost daily. I know any rally has been faded, either intraday or at the latest the very next day. So big problems that the market's having. I mean, it could be a combination of factors. Um, End of year tax loss selling. Um, for some of the stocks that have been losers, and then we had a bit of a pivot or a perceived pivot from the Fed, where they're sounding a little more hawkish than they had in the past, and somehow that's causing a lot of uncertainty and portfolio shifts. There's sort of like there's sort of sentiment now that the Fed is quote unquote trapped, because we have this sort of more persistent than normal inflation in the economy, and um, you know they're starting to be more concerned with that, which people are interpreting as hawkish. But anyway, we can get into the actual recap of the week itself. And our major ETFs, they all basically took a hit with the exception, wait, yeah, with the exception of bonds. Bonds are up almost 3%. Usually you'd expect the NASDAQ to hold up, under this sort of uh, bond performance. But, um, like we said, everything's sort of been getting liquidated here towards the end of the year. So we had the Dow down 9/10. We had S&P down 1.5%, Q's down 2.3, and small caps down another 4%. So, that big breakout from small caps, that's long gone. Now it's like about to go out the other end of this sort of year long channel. If you look at the chart, yeah. So breakout and just kidding. Now we're sort of testing these lower levels. Um, anyway, our mega cap leaders also did not really hold up as well as we would hope. Actually, Apple was up 2.5% on the week. I have no idea what is going on with this, but it was like breaking out to new highs while everything was collapsing. So whatever. Um, Google hung in down 6/10, but then the rest: Microsoft down 2.5, Nvidia down 3.5, Amazon and the rest down at least 4. With Netflix getting smoked, down 10%. Back to 600 now. So it was 700 down to 600. Yeah, so no support from the big cap tech companies. A lot of times when the sort of under the surface stuff starts falling apart, people will huddle up into here, and the indices don't give back too much. But in this case, these are being sold too. So it's second week in a row, real bad breadth among this cohort as well. As far as our flows with respect to industries, healthcare crushed again. I mean, I don't know. I don't know. This might be like the worst year healthcare has had in a long time, because it seems like every one of these recaps that I check is like healthcare is the worst performer, at least on the median healthcare stock. Uh, Tech got hit too, down 7% median basis. Basic materials down 4.5. Consumer down 3.8. The rest, services down 4. Industrials kind of hung in. Financials kind of hung in, and utilities unchanged on a median basis. Top sectors, actually, I think there were more green sectors this week than last week, but again, it's nothing to really get too excited about because they're all kind of hugging the zero line more or less. REITs, if you want to call it an outperformer, they were up 1.5%. Same with wood. If you look at lumber, the commodity, it sort of looks like it's been breaking out the past couple weeks. So if there's going to be another round of sort of a parabolic move from commodities like that, then it's only going to really stoke the inflation fears more. Worst performers, okay, these Chinese stocks, we've been saying off and on, just do not buy Chinese stocks. Like, Chinese stocks are a place that you go to, speculate a little, but these things will blow up all the time. EVs got hit, nuclear got hit, solar got hit. I mean, these are all sort of like high multiple speculative stocks, and really risk appetite has dried up in the market. There's no interest in holding these sort of names. And then let's see for how many. So we've got 25, 50. Okay, we got 50 sectors down at least 5%, and we've got 25, 6, 7, 8, 9, 10, 11, 12. We've got 12 sectors down at least 6%, with, a couple of these other ones down double digits. What is this? 11 sectors? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, 11 sectors down double digits on a median basis, which is, it's tough tape to trade. As far as screener go, in screener, we have our market cap filters to sort of look through week to date. Okay, down 4.7 for 1 to 5 billion. And then we've got down 3.4 for 5 to 10 billion. Our large caps were down almost 3%, 2.9% for large caps. Mega caps down 1.98, so 2%. That's sort of in line with the NASDAQ. And Terra caps down 1.77, so kind of right between NASDAQ and S&P for returns. I mean, you see that the distribution is like the smaller caps just got hosed. I mean, they have more than twice as bad a performance than the larger cap tickers. So yeah, there was really nowhere to hide this week. I mean, if you came into the week short, or like short a bunch of stuff, then you made out. But my impression is that people have been buying dips this entire way down the whole month. From the start of November to the end of November, they were buying dips, and now it's time to blow out. Because people can only take so much of staring at their account with losses every single day. What else is there on our overview page? We had an oversold signal on the last day of November. This is a 6-month hybrid signal, and then on 12-month we also had a oversold signal. So I'll show you the statistics for them. So I'll start with 6-month. So 6-month hybrid, the market should sort of find its footing here. Over the next couple weeks, it really shouldn't completely fall apart again. 12-month sort of says the same, has sort of the same expectancy. There is the other scenario of just falling apart into the end of the year. I mean, if you remember 2018, the conditions were similar, although not the same. The perception was that Powell was getting overly hawkish. I forget if they had actually raised rates or something at some point towards the end of the summer, and then we sort of started a slide in, I think, October or November of that year, and it basically culminated with that Christmas Eve massacre where we were down basically. I think the indices were down like 3% or something on Christmas Eve, which was kind of a Merry Christmas. But uh, then we V'd off that bottom for about months. We never saw those levels again until the pandemic, I think. Um, so that is a scenario that we keep sliding into the end of the month. Although I don't really think that that's in the cards. These sort of analog, if you can call it an analog. Some people are going to say like, oh, 2018 is analog for 2021. Those never work. So the odds are that the market's going to find some sort of balance, or get a foothold somewhere, and then figure out a new trend from there. When that is could be is anyone's guess. I mean, I expect this week to be better than the past couple weeks, though, just based on how washed out the market has really become. We are into December now, so seasonality for December is mild. I mean, this isn't anything. Our November seasonality, I don't think really played out. Although, if you remember at the start of that month, when we were way above this performance already after the first week, we kind of wrote off the rest of the month as that was it, because it was going to be hard to push much further than that. But now that everything has gotten a bit blown out, maybe you do catch, sort of a bounce in a year-end bounce into 2022. So yeah, tough week overall, tough couple weeks. But we're in the final month of the year. Don't blow up your account with 1 month to go, and ruin your yearly performance. But yeah, so we'll keep an eye on the markets this week, expecting it to be active, but more balanced than what we had the past couple weeks. So yeah, thanks for everyone joining in, and we'll meet back up with you next week, and hopefully it's a more cheerful recap. All right, talk to you guys later.